Good afternoon, everyone. Welcome to the recap. I am Laz, filling in for Scott, who is out this afternoon. Let's just kind of go through the market a little bit. When I say the market, we're going to really talk primarily about the S&Ps. Last Thursday, big sell-off, day to take notice. That would lead to further declines earlier this week. Monday, we put in a little bit of a low in the S&Ps, and Tuesday and Wednesday, slowly starting to climb back and retrace some of the damage done last Thursday, like I mentioned. So let's take a look at the chart here so we can get a visual image of what we're looking at. So this is the day we said to take notice, big selling at an area where we thought there would be an interesting level, and that's the 618 retracement area here in the S&Ps. So now we got that sell-off. We saw a pretty large move. We saw a move, and this is the spiders chart, from 136 down to about 131 into area of prior support. And that support is held for now. We're getting this very controlled bounce-like action. So let's take a look at a smaller time frame, get a little more detail. This is the open gap. This was from Monday, from Friday into Monday. So we've gone and filled that gap. You can see we've closed that gap. Now the question is, what's next? Do we continue to resume the trend? When I say the trend, do we continue maybe pushing lower from Thursday's, Thursday into Monday's pretty nasty sell-off? Or do we try and fight our way back? At this point, I think it's still too early to say. If this does maybe stall out tomorrow, again, generally you get like a 3-day bounce. If we do stall out tomorrow, that could put us in motion for maybe a possible another move down. We do have some open gaps here on the S&Ps down here around 128. So there are some areas that we need to pay attention to. On the flip side, if we do start to trade above the 134 area, and I'd like to see volume come up, that we do have room to come back up into this area. So right now, it's a very, very difficult tape to try and position yourself for anything more than just a day trade. The other thing that I want to mention here, let me take away these lines, is that we also have, I love the 21 EMA. It's one of my best indicators and sense of trend. As a shorter term trader, I love the short to intermediate term trends. And when I have a flat 21 EMA, which is the red line here, it basically denotes a trendless market. We've been in a trendless market for the better part of the month of June, as dictated by these averages. Again, not completely flat, but relatively flat, where you can see it a big sell-off here, and the market's gone sort of sideways for the better part of the month. Sideways can be violent price action, meaning you see large, the rubber band pull down and then the rubber band snap up, and then you're getting these large price movements in a short amount of times, but you're not really in a trending market. You're not making a consistent, when we talk about a trend, what is it we're really talking about? We're talking about, in an uptrend, higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. That's how we define a trending market. This is not that market. So we need to respect the fact that this is what it is until at some point something changes. And I think the best way to approach a trendless market is really by shorter term trades, day trades, 1 to 2 to 3 day type trades at very most. And that's where people, I think, the traders on the VTF are having the most success, really just going home, with no risk on the table and taking their day trades as they come throughout the course of the day and select symbols. So let's take a look at some different stocks today, some stocks that I know a lot of traders are watching. Here's Apple. Again, look at the 21 EMA. I'll take the candlesticks off. A trendless market. This is a trendless type of trend, a trendless trend, excuse me. You have a flat market. And this is, why I think you're not seeing that big breakout trade or breakdown trade here, because the stock is really just consolidating. Now, as we put the candlesticks back in, you'll see that, you can make the argument that it broke down out of a, little bit of a wedge pattern. We had this, big move last week, this big up move. A lot of traders were trying to trade this 590, breakout level here. It didn't really happen. The stock rolled back down. Today we gapped up a little bit, really not much of a trade in here. You can see the candlestick. These doji bars are a sign of sort of a directionless, trendless day, and that's fine. At some point this will resolve itself and you might see another move down. So we'll keep an eye on that, as Apple is generally a great leader and a great indicator for tech stocks. The weekly of Apple, and I've talked about this and I've talked about it on the VTF and on my Twitter stream. But what I am watching in here is this flagging pattern. This is a weekly of Apple, and I've talked about this before, like I mentioned. This is something that I am keeping a very close eye on because this could, this is our macro time frame. This is, potentially telling us we may be in for another move down. This is what we would call a bear flag. So we need to keep an eye on these levels here as Apple could become actionable to the downside. And, if that happens, just be prepared, be on alert, be ready, be in the know. That's what this chart is potentially telling us. We are anticipating possibly that happening. Again, a little more time, we'll have some more color there to be able to carve out what could potentially be a decent trade. Moving forward, Chipotle, a stock that has been a very, very difficult, again, notice the flat 21 EMA, sort of the theme here. This flat 21 EMA, making the stock very, very difficult to trade. You can see, I'll put the candlesticks back in, a lot of ebbs and flows, a lot of pops and drops here. Today we want to take notice because we have to respect the volume here. There was real impulse, there was real enthusiasm, there was real commitment to this day today. So this is the type of thing that could potentially lead to lower prices. Now, would I necessarily go and get on the short side of the stock? Not really. I'd probably want to wait to see some sort of bear flag here on the daily chart, maybe a 3 to 5 day bounce, some sort of contraction of price. Let these averages, start to turn down. And you could see further downside in here. Let's look at the weekly of Chipotle. And again, very interesting, just like Apple, sort of basing and building a little bit of a bear flag here on the weekly chart. And you can kind of get an eyeball. We've been in this, choppy, volatile little, area between 390 or 380 and 415, 420 for the better part of, 2 months or so. So keep an eye on this as volume did come up and we are looking like we're trying to break down out of this pattern. If it does, if this stock does continue to push lower, there's not a ton of support in here until we get back to that, 340, 350 level. So there's some room for this stock to trade lower. Keep an eye on that one in the days and weeks ahead. Interesting areas today, the banks, Goldman, really not a strong stock, has not been a strong stock, and at every turn has basically been sold. Interesting, I want to keep an eye on this level today as Goldman did turn up off of this 90 level. It made a low back here, retested that low and held so far. So we're going to keep an eye on that level. Now, one update is not make a new trend, but we have to respect the fact that, we do have now a more concrete area of support from which to evaluate risk from. Could this be a one up day that just went and filled this little gap here? Time will tell. Give this a little more time, and I think you'll be able to probably carve out a trade here for those looking at some of the banks. JP Morgan, is trying to come back to life a little bit after seeing such carnage after that big trading loss. There's some room to trade higher again. I'd be very careful about buying the banks and chasing highs. I'd much prefer to buy a pullback, but you have this open gap from 38 to 40 that we need to keep an eye on, as if we do see some more upside, the stock might try to fill this gap or at least get into this gap zone. So keep an eye on the banks. Morgan Stanley, the one bank that, to me, just not really seeing much buying here. It's had a big move down. Wouldn't surprise me if it did try and push a little bit higher. But, Morgan Stanley, not necessarily the one I'd go after. To me, I prefer right now to probably be in Goldman against the 90 level or even in JP Morgan at this point. So just a couple of trade ideas there. And Facebook, Facebook coming back off that low into this area, 33.50. Having trouble here, starting to base though, which is a healthy sign for possibly a leg higher. Any trade through 33.50 with volume will be a trade I would look at going forward to the long side. Let's take a look at a smaller time frame. You can see this 33.50 level right here. We tested it a couple days back. It failed. Retested it yesterday, and not really not much going on here. But keep an eye on that 33.50 level in the days ahead. For those of you that are watching this overly dramatized stock day in and day out. And lastly, let's take a look at just a symbol that was really a trade on the VTF today, PCYC. Really unbelievable looking chart. It's had a huge run from 30 to 54 today. I think we closed still in this parabolic type move. and you might see one more, potentially breakaway up day here. So keep an eye on PCYC, really more for the day traders at this point, as it is getting a little long in the tooth here on the upside, and I wouldn't be surprised that at some point, if we did hit a resistance, you did see a pretty nasty sell-off in there within the next couple of days. So keep an eye on that. This is a little extended and probably could use a rest or a pullback. Like I said earlier in the broadcast, day trading, short-term trading, very small time frames, low risk type of trades are really where people are, getting ahead, where traders are getting ahead. Big props today on the virtual trading floor. A couple of great call outs in some news related plays. ARNA, some traders really took advantage of this to the long side. And again, these are really real-time trades happening on the VTF, stuff we're not really talking about on any sort of macro level. And the other one was VVUS. A couple of breakouts here. For those that took advantage of some of those calls on the VTF, good for you. And like I said, if you're not participating real-time on the trading floor, it's going to be a much tougher tape to navigate because it changes from, you're getting these very short pockets where you get a couple days of up and then we sell off and then, we bounce back and things are happening, in a very short window of time. So if that's not the cup of tea, if that's not your cup of tea as a trader, because like I said, we are in a trendless tape, understand that cash is a position, and if day trading or short-term trading is not your thing or not what you look to do, stay on the sidelines until something changes, because at some point, somewhere down the road, next week, the week after, a month, 2 months later, we will get a more conducive trending environment, at which point it may be time to recommit yourself either long or short. So some individual stock plays today, some individual day trades, but like I said, less is more. Stay with the day trades, stay with the shorter time frames, and you'll be okay navigating the ebbs and flows of this market. As always, a planned trader is a profitable trader, and I will see you on the VTF tomorrow morning. Have a great night, everybody.